Hey guys, what is up? In today's video, I'll be sharing with you my technical analysis of the US stock markets, and I'll be taking a look at the S&P 500, Dow Jones, and the Nasdaq. If you are new to this playlist and this channel, make sure you subscribe to this channel so that you don't miss out on future videos such as this where I share my technical insights of the US stock market. We'll be taking a look at the SPY first, followed by the Dow Jones and then the Nasdaq. Alright, let's begin with the S&P 500 or the SPY. So this is the weekly time frame for the S&P 500 and then we'll work our way down from the weekly time frame. Back about a month and a half ago, we see that the S&P 500 peaked at this price level of around 359 and then it reached its low of around 320. From the high here of 359 to 320, prices fell by about 10% and that was quite a substantial pullback from the S&P 500. However, prices managed to find support at this candlestick over here about 3 weeks ago, and since then we have recorded 3 consecutive weeks of gains. In fact, in the most recent week, this candlestick over here, which was last week, prices managed to close above the pre-pandemic high level of around 339. Prices also managed to form a long bullish candlestick, and this long bullish candlestick indicates to us that there is bullish momentum behind prices. That's the weekly time frame for the S&P 500. Now let's take a look at the daily time frame. For the daily time frame, we see that prices were on a downtrend over at this period over here, because prices were making lower highs and lower lows. When prices are making lower highs and lower lows over a period of time, we say that prices are on a downtrend. However, prices managed to find support at this area over here. So let's bring on the technicals to get a greater insight of where prices are finding support at. So after a period of downtrend over here, prices managed to find support at this level of around 319. If you take a look at the left side of the chart, you'll see that prices have found support at this level of 319 a couple of times. So this was the first time, this was the second time, third time, fourth time, fifth time, and the sixth time. So this level of 319 was tested 6 times and prices managed to find and hold support at that price level. And the greater the number of times that prices reach a particular price level and find support at that level, the stronger the support is at that price level. So in this case, for the price level of 319, since prices have tested that level at least 6 times, this indicates to us that that price level of 319 is a strong support level. So for the candlestick over here, you see that when prices were pushed down all the way to that level of around 319, at that price level, buyers start to step in and push prices up and close at this level of around 323. Not only did prices manage to find support at the price level of 319 after a downtrend, but prices also managed to form a variation of the Morningstar pattern. And after an extended price decline, when a Morningstar pattern forms, this indicates to us a possible bullish reversal signal. If you are interested in learning candlestick patterns, I'll include a link at the top of the video and a link at the description box. When this variation of the Morningstar pattern forms after an extended decline, this indicates a possible bullish reversal signal. And as we see after that, prices manage to gap up and continue moving forward. If we zoom in on the price chart over here, we'll see that on Thursday and Friday, prices gap up. So from Wednesday to Thursday, there was a gap between the two candlesticks, and on Thursday and Friday, there was also a gap between the two candlesticks. So while prices managed to reverse from its spiral downtrend by finding support at this level over here, and now that we are on an uptrend, as prices have made higher lows and higher highs, the extent of the advance on Friday and Thursday was a bit too quick for my liking. So while the uptrend is still in place, in the coming week, prices might slow down for a while. So prices might move sideways for a while to digest the move upwards, or it might find support at one of these zones over here. Let's take a look at the 4-hour time frame next. So this is the 4-hour time frame, and for the 4-hour time frame, we see a clear downtrend over on the left side of the chart. So this was the lower high. So we can see that prices were making lower highs. So this was another lower high and lower low. So here was a low and then this was another low. So prices were making lower highs and lower lows at the left side of the chart. And as mentioned earlier on, prices managed to find support at this price level of around 320. And from there, prices managed to reverse back into an uptrend. So at here, we can see that prices were making higher lows. So this was another higher low and higher high. So this was one high and then another high. So on the right side of the chart, we are on a clear uptrend. And if we zoom in over here, we see that prices were charging overhead. Prices made back-to-back gains over at this period over here, as indicated by the green or bullish candlesticks. However, in the most recent candlesticks, you see that prices were losing a bit of the momentum. The first candlestick that indicated a possible slowing down of prices was this spinning top candlestick over here. This spinning top candlestick indicates to us as investors and traders in the market that there was indecision in the markets over at this price level over here. And the next candlestick, we also got a small body candlestick. But the important thing that I want to highlight over here is that for this candlestick, there was a bit of rejection of prices when prices reach this level of around 347. When prices were pushed up all the way to this level, the sellers start to step in and push prices back down. So a candlestick of indecision followed by a candlestick which shows us some price rejection above indicates to us a possible slowdown in the bullish momentum. Moving forward, there are a couple of possible scenarios. First, prices might take some time to digest a move and start moving sideways between this area over here. The next possible scenario is prices falling and finding support at either this zone over here, or the next zone will be at this zone over here. Another possible scenario is that prices might take a short break over here and continue to move upwards. So when analyzing price charts, we can look for signals and indications to guide us where prices are likely to head in the future. However, these are not confirmed signals. These are just signs that give us a higher probability of success. So that's my technical analysis for the S&P 500. The next one that we'll be taking a look at is the Dow Jones. So we'll start with the weekly time frame and then work our way down from there. So let me clear the price chart first. For the Dow Jones, we see that there was a pullback over here and prices managed to find support at this candlestick. And this candlestick is a bullish hammer candlestick. A bullish hammer candlestick indicates to us a potential bullish reversal signal. So when prices have declined for quite a bit and a bullish hammer appears, this indicates to us that prices might have found support at that price level and are likely to move up in the future. And so far we have seen after this bullish hammer candlestick form, the next 2 weeks we managed to record gains on the Dow Jones. Now let's take a look at the daily time frame. So we'll move on to the daily time frame. And we'll bring on the technicals over here. Over here, you see that prices were on a downtrend because prices were making lower highs. So if we compare these two lower highs, we see that here was a lower high than compared to here. And prices were making lower lows. So here was a low and here was another low. So prices were making lower highs and lower lows. So over at that area over there, prices were on a downtrend. But when prices were declining and were at this level over here, we see that prices were holding up at this zone of support. For this candlestick, you see that prices were pushed all the way down. And at this zone of support, buyers step in and push prices up. And similarly for this candlestick over here, when prices fall and reach this level, buyers start to step in and hold prices at that price level. And for the next two candlesticks, we also see prices finding support at that zone. This zone of around 267 and 265 is a strong area of support. After declining and reaching this area of support, prices bounced back up and started to rise again. At the start of the week for these two candlesticks over here, so the green bullish candlestick was on Monday and the red bearish candlestick was on Tuesday. There was a battle between buyers and sellers at this area of resistance. And if you look to the left side of the chart, you'll notice that this area of resistance is quite a significant one. Prices reached this area and found resistance, and after it broke out, it managed to find support now. And once it fall back below, you'll see that at this area over here, prices were finding resistance. At the start of the week on Monday and Tuesday, buyers and sellers were clearly fighting over at this area of interest. But on Wednesday, buyers managed to wrest control of prices over the sellers. And from there, it cleared itself from this area of interest and continue moving forward. And right now for the Dow Jones, we are facing some resistance at this level over here. We'll move on to the 4-hour time frame to have a greater picture of what's going on at that level. Over at this advance over here, you will notice that the candlesticks were getting smaller and smaller as it reached this area of resistance. First, we have a spinning top candlestick which indicates indecision, followed by a shooting star candlestick which shows that there was rejection of prices at this area of resistance. And over here, we have another small candlestick body. There were definitely a slowdown in momentum as prices reach this area of resistance. So prices are likely to find resistance over here and might be falling down, and the next level of support would be at this box over here. But if prices do manage to break below this box, then the next support that I'm taking a look at is this green level over here. However, prices might actually break above this area of resistance and find support here before continue moving forward. That's my technical analysis for the Dow Jones, and now let's take a look at the Nasdaq. Again, we'll go to the weekly time frame and work our way down from there. So let me clear the technicals. The Nasdaq, similar to the S&P 500 and Dow Jones, recorded quite a strong bullish week last week, as indicated by this long bullish candlestick. So the US stock market as a whole for last week was quite bullish, and this is reflected by the strong gains made by all three indexes. And for the Nasdaq, let's take a look at the daily time frame and see how prices are playing out. Over here, a hanging man candlestick forms after an extended rally. And when a hanging man candlestick appears after an extended rally, this indicates a possible bearish reversal. And as we can see, after this hanging man candlestick, prices decline substantially after that. And if we bring on the technicals over here, prices managed to find support at this green zone over here between the prices of around 260 and 256. After the decline by prices over here, prices managed to find support and start to bounce back up. And for a while, we see prices ranging between these two areas of resistance and support. The resistance is indicated by this green box above, and then the support is indicated by this green box below. When prices reach this area of resistance, it bounces back down, and prices holds up at this area of support. And for the next three candlesticks, we see that they were also trading between these areas of resistance and support. And then on Thursday, as prices reach the upper part of the resistance, the sellers start to step in and push prices below that upper part of the resistance to close at a level of around 281. And on Friday, we managed to break above this area of resistance and form this candlestick over here. And this is quite a bullish sign for the Nasdaq. And on top of that, prices were making higher lows. So we take a look at this low over here and this low over here. And prices also were making higher highs. So from here and to here. And if you take a look at the 4-hour time frame, Similar to the daily time frame, we see that prices were ranging between these two areas of resistance and support. Over here, as prices reach the upper part of the resistance, we see that there were rejection of prices over here. So this indicates to us a resistance area. And at the bottom, we see that when prices reach this area, prices manage to hold up at this area of support and bounce back up. And as prices reach this area of resistance, prices start to bounce back down and find support at this area of support again. And then prices manage to continue to move up to the upper part of the resistance. And at the upper part of the resistance, prices stopped for a bit, but the resistance did not manage to hold prices back this time round. Prices managed to break above the resistance and continue moving upwards. So right now, there are certainly bullish momentum behind the Nasdaq. Moving forward, prices are likely to continue moving up. And the next resistance that I'm looking out for is this level of around 289. However, if prices do fall, the next area of strong support that I'm taking a look at is this zone over here. So the support zone will be around 282 to around 279. If you have learned something from this video, smash that like button because it will really help the channel grow and allow me to produce more content such as this. I'll see you in the next video to your financial success.